Hey, how you doing? Austin here. In this video, we're going to be talking about SENSEONICS, the continuous glucose monitoring company. I covered these guys in a previous video a while ago, but I had a lot of people messaging me and wanting me to cover these guys, so it was time to go back and revisit SENSEONICS. Cards on the table, there's not been a lot of new news related to them. Sometimes no news is good news or whatever, but so what I did was I put together some information for you, as well as I did find a piece of content information that compares SENSEONICS to Dexcom, which is, I believe, about a $2.5 billion competitor, and I think SENSEONICS has better technology. So we just got to get them through the FDA approval process for the latest product that they're trying to get approved, which is the 180XL version of their product. So that's the big catalyst that we're waiting on, which we're going to cover all that here in a few minutes. So that's what this is about, is really an update around SENSEONICS. I'll tell you what I think I think the stock is going to be trading at here in a few minutes. I'll give you my opinion on that. Right now it's currently trading at $2. It ended at $2 on trading on Friday. It looks like we're beginning to see movement up. The stock's been down about 60% plus, probably 65% from their February 19th highs, and I think that they're poised now to continue to run up. So we'll see how that shakes out. We'll cover all that. Okay. So in this video, I want to remind you that this video is for entertainment purposes only, and if you get value out of this video, please do two things. Number one, subscribe to the channel, become part of the community. Love to have you. I'm a 30+ year investor, and I'm here to help you make money. That's all I care about. I want to help you navigate the stock market better, bring you stock investing ideas. I've got a series of videos where I just did one a day or two ago. I'll link it at the end of this video, talking about massive growth stocks, and they're hitting their 52-week highs. They're trending up, and you can just grab that trend and make money as the stock goes up. So I walk you through all that in that video. It's really cool. I do those about every couple of days. So if that's of interest, drop a like and subscribe, as well as just become part of the community. We'd love to have you. So with all that, let's take a look at SENSEONICS. Let's go see the chart, and let's talk about this news and just talk about what I think is going to be happening in the next 3 or 4 or 5 months. All right, here we go. So as I mentioned, the stock ended trading on Friday up 2.5%, up 5 cents. So that was that day's trading scenario. Actually, it was up even a little bit higher in early day trading. But really, you guys know, I like to look at 6-month chart. 6-month chart really is a better visual representation of kind of some of the things I want to discuss. So remember, I mentioned it was the slide. So if you look at their high on February 16th, all the way down to right here, April 20th, that was a 66% drop. Now I want to add in, there's two scenarios here. Okay, number one, we had a massive market correction right in here where the NASDAQ lost about 1,000 points, right at a little bit, I think it was a little bit under 1,000 points. And then you had another one right in here, somewhere in this area, where there was another about 7-10 day market correction. So you had two major correction events that happened that obviously SENSEONICS impacted them, right? You also have a scenario here where a lot of money was moving out of biotech and moving into, just moving away from money. A lot of money was just moving out of biotech in general. I think that impacted SENSEONICS. And so I do think, I'll give you my prediction on what I think this stock is. I think that this is, if we get everything we want to get, we get FDA approval for the 180XL in the third quarter, which is what we're expecting, as well as just, we get some good tides as it relates to the market. I think this is a $6 or $7 stock by the end of this year. I hope it goes higher. I definitely think so. I am bullish on these guys long term. After that, the sky's the limit. I mean, Dexcom, we're going to look at an article. Dexcom is a $2.5 billion company, and I think SENSEONICS has better technology. Diabetes and the monitoring of that is a problem that plagues our American culture as well as worldwide. So the market for this is massive. The technology and the products. This is game-changing, life-saving technology. So I love what SENSEONICS is doing. I love how they're going about it. And I think that we just got to get some positive momentum moving behind the stock. And right here, from our low, low right here, the stock is up, 12, almost 13%, right? So we looks like we've got the beginnings of a nice bounce back up, and hopefully it will continue. If we can get give a another week or so plus of good NASDAQ and the Dow doing what it needs to do, then we should be looking at moving forward really, really nicely. Okay, so let's transition and let's talk about basically how SENSEONICS is on a similar trajectory as Dexcom. And Dexcom is a really, really very big company. Dex stocks could rise 5 to 10 times over the next 5 years once it approves FDA approval. Okay, so again, you're looking at current trading at $2, 5 times would be 10 to $20. So I think my forecasting maybe even a little bit low, right? But I tend to be a little bit more conservative. And at $6 to $7 in 12 months, that's still a massive growth for the stock as well as for the company. Okay. So recently, SENSEONICS released its earnings on March 1. Said the company had $187 million in cash on its balance sheet as of January 30th. It's up 18.2 million. The reason I'm focusing on this, guys, is that I love that they've got this war chest of cash, right? So cash went up as a result of equity financings completed during the first quarter of 21. So, and this is a quote from the CEO: "The existing cash and cash equivalents should be sufficient to fund the business through cash flow, break even from operations, and the commercial launch." Awesome. Okay. So this relates to its 365-day sensors designed to be calibrated only once per week, called the SENS XL. The company is already collaborating with the Swiss company Essentia in marketing its 90 days and 180 days sensor through Europe. Okay, so this talks about how they're the kind of the burn rate through cash. You can pause if you want to read that. This is really what we're after. We're waiting on basically FDA approval for the SENS XL. Right, that's our major catalyst. We're looking at, again, a Q3 scenario. Third quarter of 2021. Okay, so investors can expect to see stock move higher as the company rolls through these sets of catalysts. I would tend to agree. In addition, doctors are free to schedule surgical implants of diabetes monitoring devices. This will allow SENSEONICS revenue to climb out of the hole it is in. And somewhere, it's right here. Okay, so again, you probably already know this. They did 4.85 in 2020. It was down 21.3 from 2019. Massive drop. I'm firmly believe that was a result of COVID, the pandemic. Okay, the analysts surveyed think that they're going to be basically doubling their sales to 12.85 million in 21, and 22 revenues forecasted to go up to 32.9. Again, pretty small. I don't mean small as it really in a bad way against SENSEONICS. My point is the revenue is very small relative to the overall market opportunity, right? So they have a massive amount of opportunity ahead of them. This is a multi-billion-dollar space globally, and right here, one of its main competitors, Dexcom, now has a $35 billion market cap and trades at 15 times 2021 forecast sales of $2.8 billion. Okay, so it's pretty safe to say that SENSEONICS has a tremendous amount of opportunity in front of them, and we've just got to get the FDA approval of the SENS XL, and I think we're off and running. I talked about that earlier, but right here we're off and running to the proverbial races. Okay, I think that's where we're kind of headed. Dexcom right here, like SENSEONICS, also has a cloud-based diabetes monitoring sister product that allows the recipient to not have to use lancers to prick their fingers while they monitor their blood sugar levels. Okay. The analysts think that this is about $1.69 stock, so we're already past what they are consensus. I'm not paying attention to the analysts on this one at all. If you look at the pathway that Dexcom took over its history, remember Dexcom 2.81 billion in 2021 forecasted sales. Dexcom took over its history in the past 5 to 10 years. You can see that the market will warm up to SENSEONICS. It took Dexcom a little bit for the market to kind of warm up to them. That's basically what they're saying. Look to take advantage of the recent dip in SENS stock with a view towards its potential long-term trajectory. I didn't say this earlier, and I usually say this at the beginning of the video, guys. I firmly believe, from a long-term standpoint, I mean, look, here it is. Let's lay cards on the table. If you look at where we're at trading right now, if you don't have any, if you haven't bought, if you're looking at buying, if you're trying to figure it out, again, do your own due diligence. tech or fundamental analysis, technical fundamental analysis, see if it's the right fit for you. If it is, take a small bullish position. But I mean, $1,000 in this would buy you, don't do math in public, is 500 shares. Is that right? Yeah, that's it. Okay. Yeah, don't do math in public. 500 shares of this, and if it continues to rise and go up, then if you have $1,000 to invest, this may not be a bad idea. But don't put the kids' college fund in this, because it's still officially still a penny stock. It's still a speculative play. But I think they're headed in the right direction, and I think that this is a good one long term. I may be doing that myself in the near future. I like their story. I like what they're doing. I like where they're headed. This is a real company with a real plan. They've been around the block with getting products, approved through the FDA. So their other products, and so this is the real deal. And I think again, look at the path. The reason I chose this article. This article's been out for a little bit, but the reason I chose it was specifically the comparison to Dexcom. They're a major competitor established competitor in their marketplace, and it's not going to take a lot to move this stock, right? And to move it up and continue to get it up. I think we got that Q3 catalyst. I do expect to see some pullbacks. We had, you can kind of look at the volatility, but it would seem from this chart, the 6-month chart, that we have started to maybe bounce back up from our low, which we set really only 3-4 days ago of $1.77. And look, it's already bounced back up 13%. So if you're looking to minimize risk, maybe take a bullish position, put a trailing stop loss order in it, maybe 15 to 20%. Something like that. That way you're protected from downside risk, and you got your stock, and you can sleep good at night, and you got your however much you choose to put in it, and roll from there. So again, not a lot of new news for these guys, and so I wanted to make sure that I covered everything, and yes, I have. So just to reiterate, to kind of wrap up, is we're waiting on FDA approval for the XL version, and we're seeing that as a Q3 scenario. That's what we're hearing. That's what it's looking like. Their biggest competitor Dexcom, $2.81 billion forecasted sales. We're only looking for, what was it, 12 million in sales, 12 million and change. Right here, 12 million and change in 2021, and 32 million. I mean, we still have a massive amount of runway in front of Sensonics for them to continue to grow, because it's a multi-billion-dollar space, and I think we got a lot of opportunity to run back up. Also, I would remind you that a lot of money has been moving out of biotech in the last 2 months. So we had major corrections there where a lot of money flooded out of biotechs, and that money should start to come back in. Will Sensonics benefit from that? Maybe not, because institutional money doesn't really come into penny stocks or any stocks like this. But if we can continue to grow the market cap and grow, we should see some of that. So wrap up $6 to $7 within 12 months, and I'm hoping, I hope I'm low. I would love to be wrong on the high side, right? I would love the stock to do better than that. This is probably a $10 to $20 stock in 2 or 3 years if everything kind of moves forward the right way. And I'll end on this note. I love that these guys have been around the block a time or two, and they've already been through the FDA approval process, and they just know, and they know that process. That's a major big deal, because dealing with the FDA is not an easy thing, and dealing with the European equivalent as well. So they've been down these blocks. They know what they're doing, and I like them for that. I'll wrap up on that. I hope you guys enjoyed the video, and I'll see you in the next one. If you haven't already done so, subscribe to the channel, drop a like if you got value out of this. I greatly appreciate it. I'll see you down the road. Bye.